Hello and welcome to the CNBC TV18 special. I'm Shereen Bhan and we've got a very special guest joining us on the program today, an old GE veteran and an old India hand as well, the global CEO of GE, John. Thank you.
You don't have to old so much, but the rest of it's okay.
Okay, the GE veteran then.
There we go.
Well, thanks very much, John, for joining us on CNBC TV18, and it's great to have you back in India. Congratulations on your new role.
Yeah.
Let me start by asking you about India then. I mean, you know, this has been a story that GE has bet on for decades now. You were here in India between 2009 and 2013. A lot has changed since then. What's the current status as far as GE's commitment to India is concerned?
Oh, no change in commitment. I'd say we've only amplified since I've been here. The business has grown. When I first got here, Shereen, we had, I think, 700 or 800 million in sales. We're close to 5 billion. So our business has grown dramatically in healthcare, in aviation, in power, our research center, our supply chain. So we're doing more of everything that we were doing when I was here. And I'd say the macro mood, I met with government officials in Delhi yesterday, a lot of customers. The macro mood around the government and everything and what's going on in the country is really strong. So we're all systems go.
So almost at 5 billion, because these targets have been elusive for GE in India.
Yeah, I might have said that to you a while ago. Now the current management team's been able to do it.
So what's the next target then? What's the target that you're aiming for?
So we were there yesterday. I said 10, guys. You know, how do we get to 10?
10 by when?
You know,
10 by when?
Well, they owe me that answer right now. So,
okay.
You
but
know,
let me ask
not
you.
soon enough.
Let me ask you about where things stand as far as the diesel locomotive business is concerned in India. There's been a lot of conversation and a lot of back and forth. The government says that we're going forward, but we're still seeking clarity on what that means exactly.
Listen, we're moving forward. We have obviously a contract in place. We're executing under the contract. We're on or ahead of schedule, and so I'd say from our perspective...
no change?
No change, absolutely.
Because they're talking about electrification of the Indian railways over the next 5 years.
So over time they'll do that for sure, and I understand what they're talking about. We have an arrangement for diesel. There's going to be a place for diesel, so we're just executing under our contract.
So the current order stands as is?
Yes, correct.
Okay. Let me then talk to you about how you see things change for India, if at all, given the global restructuring that you're currently in the process of taking forward?
So we've got we announced 12,000 workforce reduction last week, mainly in our power business and mainly really outside of India. So we've got about 300,000 employees in total. This is about a 4% reduction. It shouldn't have any really impact here in India. We're adding people really in India right now.
So you're going to add people in India and not going to be looking at optimizing in India?
No, this is really a broader restructuring of our global footprint and supply chain, so India should have essentially no impact.
And when we talk about the global restructuring and its impact, because the businesses that you continue to want to bet on, aviation, which is a significant focus for you here in India, healthcare, which in a sense was incubated here in India. So give me a sense of how you intend to leverage India as part of this global restructuring exercise.
So India, I look and say, we look at it 2 or 3 different ways. One is a market, one is a supply chain source, one is a research and development center. Market, as we said before, really strong, and we continue to invest and take advantage of that. Supply chain, I was in Pune this morning. We've built a large multimodal factory there. So our supply chain and sourcing from India has doubled or tripled in the last few years. I think that will continue to grow at a very high pace. And then lastly, we had another announcement a couple of months ago. We have 9 research centers globally. We are consolidating that down to 2, one of which is going to be in Bangalore. So there's going to be more and more of our research and development and engineering work done in Bangalore. So I think you see India as like a triple threat, really, of a market, a supply chain hub, and also a research center.
So what does that then mean in terms of fresh investments for GE in India?
Listen, we've continued to invest heavily organically.
Yeah, while other people were not. While other people were complaining about policy paralysis, you were investing in India.
So we're not really looking at, say, at much M&A, really. So it's organic investment, product development. Went through some plans today to expand the factory in Pune and what kind of volume levels we need to do that. So I think you'll see capital investment in the supply chain and manufacturing, and then product investment, research and product investment here.
What about new partnerships and new areas of opportunity? You've just inked an agreement with the Tata today, with Tata Advanced Systems, specifically for your components for the LEAP engine. Give me a sense of the scope and scale of that partnership.
So a couple of thoughts, I guess. One is our aviation business globally is a powerhouse. We're winning campaigns all around the world. The LEAP is the state-of-the-art engine, and we've got a global supply chain. We're going to collaborate with Tata to build some of the components for that, for the global deployment of that engine. So that really is coming to market this year and then really ramps up in 18, 19, 20 as the engines get delivered. So big business for us, highly successful. There's going to be a lot of activity here with the Tata Group.
So what kind of investments will this entail?
So those are really their investments in terms, they're going to be a supply chain partner of ours. So we're really, our investment is the technology and winning the orders around the world. Their investment's going to be in
so the center will be set up by them, they invest in the
and they've got a number of activities in this area already, supporting other U.S. companies and some defense contractors. So they've got a base level investment. We're going to add to that in terms of what they need to do to fulfill our orders. And then we've got some defense activity in our aviation business, and I expect that we'll be doing, more with them here in that business
so
as
when
well.
does the Tata arrangement get off the ground, so to speak?
Well, we signed it, that's a good, basically now. I mean, these orders will come in for fulfillment in 18 and beyond. So this is not a PowerPoint, this is now.
Are you looking at any other arrangements in any of the areas that you're currently in or interested in?
So I'd say, Shereen, a couple things. In power, we've got a number of key customers and government relationships. So we've got a good partnership with BHEL, NTPC, other people, private developers. So we've got a pretty deep ecosystem of partners in the country already. Don't see us needing to really add anything material to that. And then on the healthcare side, we continue to grow what we call our affordable care portfolio. So when you and I first met, we were developing a whole set of products for India that we could take outside of India. That's turned out to be an amazing business. So we've gone and expanded that in Africa and Southeast Asia and other parts of the world. So that we're doing largely on our own, but we could do some partnerships here in that space as well.
So what are the challenges that you see here in India? Because power, for instance, and the government has put together a big reform package for the power sector. The Uday scheme is in play now. What's the feedback that your team in India is giving you about the state of play when it comes to power in India?
So, you have the much talked about power surplus and, is that really there, et cetera. So I think we expect the power market to be strong in all stripes. Growing renewable penetration, growing maybe decentralized power generation, more need to get power out into areas of the country that don't have it. But I'd say fundamentally, India is going to continue to have strong power and electricity demand growth. So we expect that to be a strong business.
You talked about sourcing out of India and how that's grown manyfold for you over the last few years. From an export perspective and using India as an export hub, what's the sort of opportunity that you're now willing to bet on over the next few years, given the many changes that we've seen, the goods and services tax, for instance, and that was always a bugbear for foreign investors in India, the complicated sort of tax structure. Has that changed perspective on India, especially when it comes to exporting out of here?
Yeah, two or three things have changed. One is, and this came out in a poll recently, but I just say the ease of doing business here has continued to improve dramatically since I first came here, whether that's GST, regulatory environment, just the willingness of states and the government to coordinate. And so that has continues to get better, and that really drives a lot of investment in the country. So I'd give an A on the report card for that. And then we have seen just growing manufacturing and engineering capability. So when we first manufactured here, we're doing, I'd say, lower tech kinds of things. If you look at our facility today in Pune, this is like state-of-the-art electron beam welding and things. It's really on par with anything you'd see around the world. So that allows us to have much more complex products and components coming out of here. So better government environment, better skilled workforce, higher adoption of technology. It's a good picture.
It's a good picture. Let me ask you about the U.S., where we're now seeing this massive tax reform plan being taken forward by the Trump administration. What could be the impact of a significant reduction in the corporate tax rate mean for companies like yours and your dynamics in emerging markets like India?
So our actual taxes probably will go up under this tax bill. We support the tax bill, you know, unilaterally and fervently. The main thing that is interesting for us and for multinational corporations is a technical thing they call a territorial tax. We want to be taxed in the countries that we do business in. That's pretty much how every other government is set up. U.S. had always been, no matter where you're operating, you have to pay a tax in the U.S. That changes under this legislation, and so I think it's going to be healthy for multinationals. Our actual tax rate might go up, but we feel like we'll be on more even footing. So I think it just allows us to be even more competitive globally, so you'd see us doing more things around the world.
But does it also mean more globalization, or does it mean less globalization?
The tax bill by itself, I'd say, is neutral to positive on globalization. So it certainly, for our perspective, we would have, I'd say, a more competitive position around the globe than we have today. So I'd say neutral to positive on globalization.
And what about growth for the U.S. economy? Because that's surprising on the upside and looking strong. So what does that mean? What does that mean for GE?
So we're 70% outside of the United States right now. So we used to live and die on the U.S. GDP number, and we still care about that.
No longer.
Well, you know, we watch it carefully because it quite often is a reflection of the global economy. But it's, listen, if you go around the world right now, the economic environment is very strong. Europe solid, U.S. gaining strength. I was just in Japan Monday and Tuesday this week, surprisingly strong there. Exports up, stock market up. So around the world, commodities starting to move a little bit. So this is, I think, in the last 20 years of my career, probably the strongest I've seen the global economy, you know, all at once. There really isn't a soft spot. And the big horses, India, China, Southeast Asia, Africa, we've got a big business in Africa. Those are all, you know, double-digit kind of growth. So we can't complain about the macro picture, for sure.
We can't complain about the macro picture, so let me ask you about the micro picture and talk to you about the restructuring plan that's underway. So is 2018-19 going to continue to be about cost-cutting? Is it going to continue to be about optimization, divestiture? How much of it is going to be about growth opportunities?
Sure. So you almost have to think of this as a tale of two cities. So we have had challenges in 2017, largely in our power business. The rest of the company really is performing very well. If you look at aviation, if you look at healthcare, if you look at our renewable business, the rest of the company growing, generating cash. We've had an issue in one part of the company. That's what you're really seeing in terms of our restructuring efforts, having to make changes to our dividend. So we've called 2018 a reset year. I think in those businesses, we'll be in, you know, fix-up mode. The rest of the businesses will be, and I'm really trying to focus the company on the power business, the healthcare business, aviation business going forward. My job is to isolate the resources and the investment and make sure they're not affected by the areas of the company that we need to fix. So
when you talk about being in fix-up mode, outside of the cost-cutting plans that you've already outlined, which is $1 billion in 2017 and $2 billion in 2018, what else is part of the larger fix-up plan that you speak of? Because there have been concerns on whether you should continue to keep some of these businesses together. Is even this much too complex? Because if the restructuring exercise is all about making complexity less, then does this continue to achieve that purpose?
So what we announced, Shereen, is really a couple of things. We had a presentation in November to analysts where we said, hey, we're really going to focus aviation, healthcare, power. I had a sense watching the company, even before this job, that we were just spread a little bit too thin, focused on too many things, and that to really support and invest and grow the core, you know, businesses that we're really strong in, that we needed to lighten our load in the other businesses. So we announced $20 billion of divestitures, and that we're examining our options with our transportation business and our oil and gas business. So those are very good businesses, but at some point I felt we had to step back and say we can't feed everything at once. I want to focus on these three businesses and then really support those. We've got big investments in digital, making these industrial businesses digital, and then additive manufacturing, which is a very new age way to produce things, and it really will affect supply chain. So we're going to use that in our three businesses, but we're getting into that as business line as well and sell those capabilities to companies around the world. So the piece that's left is a very robust 3 #1 franchises, global. I mean, people would give anything to have any one of those businesses, never mind all 3 of those, and the rest will find the right homes for.
When do you hope that you will find the right homes for the rest of them?
You know, I'd say 2018 basically is what we said was 1 to 2 years, but I'd say 2018 largely would be the process of negotiating and deciding what to do with those, and then it usually takes 6 or 12 months.
Have potential buyers already started engaging with you?
As I said, these are really high-quality businesses. So I've got a lot of things to do in this job, but one of them is, my phone rings off the hook on a number of these things. So we really had good businesses. I just wanted more focus on the largest and strongest ones.
So part of this reset, in terms of new areas of opportunity outside of the 3 growth engines that you've already identified that you want to bet on and stick with, as you make the bet for the future, is there anything that's interesting that you could potentially consider?
So again, I think the possibilities for digital, we have barely scratched the surface. If you're talking a scale of 1 to 100, we're at like 3. So I think we've identified that as an area, but in terms of how it really comes to life in our business and our customers' business, very, very early stages. So the other thing, as I said, additive manufacturing, I think, is going to transform everything about manufacturing, everything about supply chain, everything about just-in-time inventories. It's going to be, people will look back at the way we do things today and say that seems quite backwards. So we're not going to get into a completely different business line or something that we're generally not into today. And again, I come back and say, if you look global, long-term forecast, what's growth in transportation, aviation, what's growth in healthcare, what's growth in power and renewables? These are, these are 20, 30, 40-year cycles that we think we can ride for a long time. We just want to be the best in the world at those businesses and in those businesses.
So, there is obviously a confidence issue at this point in time, and you need to convince investors and need to convince Wall Street about how this restructuring operation is planning out for you. But what's been the biggest challenge for you personally, taking over at a time when you need to pursue this sort of hard restructuring, hard reset?
So, a couple things I'd say. I've been in tough times before. I started out in the financial service business. I went through a number of sort of cycles in that business and restructurings of investments and things we had. So I've done something like this many times before. And I took over a healthcare business 3 years ago. And at that time, nobody liked our healthcare business. There are a lot of questions. Why don't we get rid of it? Why do you guys keep this thing? I came in and spent a few months looking and said, this is basically a really good company, really good asset, really good technology, incredible global franchise. We can run it better. Let's, focus on the customers. Let's focus on what matters. Let's get rid of the pieces that aren't. Now people love our healthcare business. And so I look at the same thing with the company right now. I feel like I know what we need to do. I know that most of the issues we have are self-generated and are therefore in our control to fix them. And so we just have to do it. So 2018, it's not an easy button that we wake up on January 1st and everything's finished. But I'm highly, you said there's a confidence issue. I don't have a confidence issue, but I realize that we have to show people, all the words in the world that I say don't matter.
So when you say that a lot of the issues are self-generated issues, is it just too much diversification essentially?
No, because
what would be the top 3 self-generated issues that have led to where you are today?
So 2 things on that, Shereen. One is, if we had issues in 7 businesses at once, then I think you could say, hey, there's something systemically wrong with the way we're running the company, or the, intrinsically the complexity of the company. I do want less complexity, but I look and say the biggest issues are really in one business, our power business, and we made basic mistakes there around size of the market, change in the mix to renewables, and there's a chain reaction of that. We built too much inventory, thinking the market was going to be stronger. So it was really a localized issue, and again, really not in the India market, in other markets. So more focus is better, less complexity is better, but most of the company running well right now.
You know, you talked about healthcare, and I want to come back and discuss India specifically from a healthcare perspective. There's been a lot of controversy, especially when it comes to MNCs operating in India on price caps, for instance, medical instruments and, you know, stents and so on and so forth. Is this something that, you know, that concerns you at all at this point in time?
Listen, it's for our products and services in India, it's a highly competitive market, and so we're out there competing every day against multinational competitors, Indian competitors, Chinese companies are in this space. So we feel like we're in a very intense market, and so we don't feel like there's any kind of pricing, you know, umbrella or something that we're living under in India. So I think as a general philosophy, we're a market-oriented company, and I think if you're trying to draw investments and activities, the more the market is controlling what happens, and the more people are rewarded or penalized for their own merits and their own competitiveness and their own customer value and things like that, that's in general a better environment anywhere around the world.
So let me end then by asking you about where India fits in the strategic roadmap for GE. Clearly, from a revenue perspective, even if you're at 5, it's not really going to change global dynamics for you in your mix. But from a strategic perspective, you know, what's the mandate? What's the brief to the team here in India?
So first of all, 5 becomes 10, 10 becomes 20. So I mean, you have to start somewhere. And frankly, when I first came here, that was one of the arguments. People were like, it's not that big. Even if it grows 15 or 20% a year or 30% a year, it still won't be that big. And we could have taken that thought and just stopped right there. So it has impact in an absolute sense financially. The bigger thing to me that we've learned over time in India is how to look at the, you know, the marketplace first, what things work, what do customers really need. And so when I spent my time here, I had a good sense of the company's strengths and what we could do. But I'd meet so many customers like, yeah, that's good, but what I need is this. In my environment, I need this. In my clinic, I need this. And so they've really, I think, taught us to be outcome-oriented, solution-oriented. And that's the future of the world. People aren't buying devices because they want devices. They're buying healthcare equipment because they want clinical outcome or economic outcome. They're buying planes because they want to get from point A to point B. So it's a big financial driver. It's a cost point that we have to look at and say, you know, the rest of our businesses have to be competitive here. And then lastly, just that mindset, the growth mindset, and that I'd finish with that. If I had to sum up India in one word, I'd say it's growth in every aspect, inside our company, in the country, optimism in the future. And, you know, strategy is a mix of plans and numbers and mindset. And I think, you know, if I could have that India mindset everywhere in the company, I'd be super happy.
Well, John, we wish you the very best of luck with your new innings at GE and with your plans here in India. It's always a pleasure speaking with you. Thanks very much for joining us on CNBC TV18.
All right, Shereen, thank you. Appreciate it.
Well, with that, it is time for us to wrap up the CNBC TV18 special from all of us here. Goodbye, and many thanks for watching.